Hey guys, welcome back. Today in this video, we're going to talk about everything that you need to know about the market structure of Forex. We're going to cover the centralized and decentralized markets. Also, we're going to talk about what are the major players in Forex market. And also, we will be talking about the three types of market structures that are bullish, bearish, and ranging markets towards the end of the video. So make sure to watch the video till the end. And without any further ado, let's get started. So first of all, if we talk about the market structure, we need to understand the difference between the centralized and decentralized markets. And first of all, let's go towards the centralized market. Now in centralized markets like stocks, there is one specialist, and that specialist is an exchange mostly that is regulating their stock. For example, New York Stock Exchange. So all the stocks are listed on the New York Stock Exchange, and whenever there is a buyer or a seller, they go towards their broker, and their brokers are connected with their stock exchange. So let's say there's this buyer and there's this seller and there's this specialist, and this specialist controls the price of the stock. So let's take an example, and here we can see that let's say there are X 100 buyers for X stock, and that stock is listed on that specialist exchange, or the, let's say in this case, New York Stock Exchange. So when the things are balanced, when there are 100 buyers and 100 sellers, now these 100 buyers are saying we got cash, we want to buy this stock, and then there are these sellers who say we want to sell this stock. So these buyers and these sellers are in balance, and market is moving either up or down or inside a range. But let's say for any reason, the number of sellers increase all of a sudden. It could be anything related to, let's say, the company revenue release or the quarterly company review. So let's say after it's published, the number of sellers who want to short this stock increase, this X stock increase a lot. So now let's say there are 200 sellers, and the buyers are still same or even reducing. So the buyers are approximately 100 and the sellers have increased all of a sudden. Now when the sellers put their orders and ask this specialist to execute their orders, they're bound to execute. So in order for this to happen, in order for this instability in terms of the price movement, what this specialist can do, they can widen the spread and increase the fees for opening and closing the trades. So which will lead to or discourage the sellers to taking short positions on this stock. So this is the practice that mostly happens in stocks. So the stocks market is very manipulative when it comes to how your orders are executed. So this is a centralized market because one specialist is controlling everything that the trader, the buyers and sellers can do. Okay, now let's talk about the decentralized markets. Now in a decentralized market, there are a lot of players. For example, if you look at the structure of this decentralized market like Forex, there are banks involved. There are these EBS brokers or electronic brokers. Then there are routers, market makers, and like the retail traders. So the Forex structure is very much decentralized. And that's why your orders are executed immediately when you place them. And also this helps in keeping the fees for the trades too low, and also the spreads, zero spreads, because a lot of the brokers really offer the zero spread accounts. So this is the structure of decentralized market, where there is no one specialist who is controlling the price of that currency pair. Now if we talk about the market hierarchy for Forex, then it goes like this, in which there are these major banks who are at the top. Now these major banks deals with the funds of billions of dollars, and they are either exchanging their funds bilaterally or through like the electronic brokers. And then there are these EBS and routers, The routers have changed their name now. They have rebranded themselves. So through these, they take their trades and they provide liquidity to the major banks. And after that, is this medium-sized banks, okay, which take major part of this forex market. And then there are these retail market makers, retail ECNs, hedge funds, and commercial companies. And then there are these retail traders at the bottom. So you see, all these are placed in terms of who has the biggest market share. So the major banks have the biggest market share in the forex market, and then there are EBS floaters and medium-sized banks, and then there are retail market makers, retail ECNs, and hedge funds. And at the end, we have the retail traders. Now, back in the day when the internet was not a very big thing and everybody did not have access to internet, retail traders were nowhere or very little in the forex market, because executing and taking action or taking participation in trading was very difficult, and it was only a thing that banks or governments would do. But with the rise of internet and with the access of internet to every person, they've been able to place their trades from anywhere in the world. And that's why the retail traders are increasing with year. So if we talk about the market structure in terms of the chart, that let's say here we are on GBP SGD chart. So the market moves in one of these three phases at a time. So all the time, the market will be either in a bullish trend, in a bearish trend, or in a ranging structure. Now, let me just go ahead and show you how it looks like and how you can detect which market structure the market is following. So first of all, let's talk about the bullish trend. Now, in case of bullish trend, the market will be moving in the bullish direction or in the upward direction. And the way you can determine if the market is in bullish trend is you should look for the formation of consecutive higher highs and higher lows. For example, if you draw waves here, you will be able to see that there is this consecutive formation of these higher highs. This is the higher high, this is another higher high, and again this is another higher high. And also there is consecutive formation of these higher lows. So this formation of higher highs and higher lows means that the market is in bullish trend. Now, if we talk about the ranging market structure, inside a ranging market structure, the market moves in sideways. It goes up, down, up, down. So the ranging market structure is really nothing but indecisiveness of the market. In case of the bullish trend, the sellers are nowhere to be found and the buyers have control. So the buyers drive the market in the bullish direction. However, in case of a ranging market structure, is no control of buyers, nor the buyers, neither the sellers. So the market kind of makes this ranging structure or this sideways structure in which both buyers and sellers are struggling to take control of the market. And when we talk about the bearish trend, in case of bearish trend, the sellers take over the buyers and they start to drive the market in the bearish direction by shorting that currency pair. So if you look here, there is this consecutive formation of these lower highs and lower lows. And with the formation of these lower highs and lower lows, it is confirmed that the market is moving inside a bearish trend, and now the sellers have control of the market. So they are driving the market in the bearish direction. So these are the three phases that you will always see the market following, at least one of them. It will either be moving in the bullish direction, or it will be moving inside a range, or it will be moving in the bearish direction. And bullish trend means that the buyers have control. The bearish trend means that the sellers have control. And the ranging market structure means that the market is indecisive. Neither the buyers nor the sellers have control of the market. So I hope you were able to understand the market structure of Forex and how the market structure is represented on Forex charts. If you have any questions, please comment down below and I would love to answer them. Also, don't forget to like, share, and subscribe. See you guys in the next video. Thank you.